Ever since Trump returned to office, he has been pressurizing the Federal Reserve to reduce interest rates. However, based on what they just said today, he will be left feeling furious. In this video, I'm going to go over the key summary points of what was said and why I believe interest rates will be held steady for longer than you may think. So let's get into it. First, let's go over the key points from Powell's testimony today. As you can see here, Powell said that the US is not in a recession and many paths are possible. So I won't read all of these out, but you can see that he said you could see inflation coming in not as strong as expected. If that's the case, then that would suggest cutting sooner. However, if there is a weakening labor market, that would also suggest cutting sooner. But if the labor market remains strong, then interest rate cuts would come later. Also, the federal projections are for inflation to move up because of Trump's tariffs. So what will happen with rates will depend on the economy. Also, a significant majority of policymakers that feel it would be appropriate to reduce interest rates later this year. Now, towards the end, he said, if we saw labor market weakness, we would change things. But as long as the economy is strong, we can take a little bit of a pause here with reducing interest rates. And it's too soon to say anything on supply chains. They're watching that. Basically, what they're saying is I don't really know what's going to happen. The projections are for the economy to remain strong and inflation to increase again, especially due to the tariffs. So now let's take a look at the economic data. And what you can see here is this is the US GDP growth rate. Now there was a decline in Q1 of this year, and we saw that with the stock markets dropping quite severely. But you can see now that for Q2, Q3, and into 2026, the economy is expected to grow. GDP growth is expected to be positive. As a result of that, it's very unlikely that the Federal Reserve will decrease interest rates because their mandate is for stable and sustainable economic growth. Now looking into inflation, we can see here that for June, it's projected to be 2.5%, but in September, they're looking at 3.2% inflation, and that is because of Trump's tariffs, the delayed effects of the tariffs. So we can see once again that even going into 2026, inflation is going to remain above 2.5%. So decreasing interest rates will simply increase inflation. That is the last thing the Federal Reserve or any of us really want. And finally, looking at unemployment rates, now economists classify full employment where unemployment is less than 5%. And what can we see? Well, in May, unemployment came in at 4.2%, and it's expected to increase to 4.4% into 2026. But that's still below 5% unemployment. So in the grand scheme of things, this isn't really a big change or anything for the Federal Reserve to worry about. So what would happen if they reduced interest rates this month or next month? Well, if they reduced interest rates too early, what we would see is inflation rise even more than projected. What we would see are asset prices increase. Now this would help the rich. This would help landlords and homeowners. It would help anyone who already has an asset. But the thing is, house prices, property prices are expensive enough. And no one really wants to see house prices go up any higher because they're already unaffordable. On top of that, we also don't want to see the cost of our goods, our shopping going up because that would leave us with less disposable income. Now, when you think about unemployment, what would happen to unemployment if they decreased interest rates now? Do you think that we would see a decrease in unemployment? I personally don't, and here's why. What we're seeing is an increase in unemployment primarily because jobs are being replaced with automation and AI. Decreasing interest rates won't do anything to change that. What it will mean is companies have more money, they have the ability to take out cheaper loans to invest in more automation and AI. It is unlikely it will lead to more jobs. As a result, this combination of a growing economy, of higher than wanted inflation, and a strong labor market gives the Fed absolutely no reason to decrease interest rates right now or in the very near future. If anything were to change drastically, then, like they said, they would look at it then and make a decision then. But it's unlikely that will happen, in my opinion, for at least the next 1 to 2 quarters. So regardless of what Donald Trump says, I do expect to see these interest rates held higher for longer, at least towards the end of the year. If you like the video, please leave a thumbs up, subscribe, and I will see you on the next one.